Hello guys, welcome back to ESENtaxa. Andrea Papito here, and in this video I'm going to talk about how to pay zero taxes in Belgium in 2023. If you're new in this channel, ESENtaxa talks about how to optimize taxes in a country you want to relocate into. We are specialized in Italy. We are #1 channel on Italia optimization plan and tax strategy if you want to relocate in this country, but we also are exploring more and more jurisdictions, and we are now in this video talking about Belgium. In the description below the video you will find our email contact if you want to have a consultancy services from us, and or a 15 minutes free call in which we can drive you through our possible services based on your situation, based on your case analysis. Now, a lot of people are not aware of that Belgium is not only a country where you pay a lot of taxes, but also a country where you actually don't pay any taxes for certain kind of incomes. So this is a very particular country because it's a tax heaven and a tax hell at the same time. Now, not all the type of incomes, of course, fall into the category of being tax-free, but here I'm going to explain exactly which are the situations which are not so complicated, in some cases are straightforward, and in which basically you are able to pay zero taxes or even more. It's not just the fact that you don't pay any taxes, but also you don't have to declare in the Belgian tax file return the income, so it's not even part of your worldwide income or global income, okay? I have put a list of elements and situations here in this paper where you can actually be tax-free in Belgium. First of all, the first situation is when you own shares of a company, a limited liability company in Belgium, and you detain those shares for long term. So you're not basically purchasing and selling shares of a company in short terms, because keeping them in long term for Belgium law system means that you're not working as a speculative, you're not behaving like a speculative person. So this makes for Belgium tax system this kind of money be tax free. Okay, so first case, having shares of companies of, let's say, LTD for long term. We possess these sharings for long term, we sell them, so we're gonna sell them, and the capital gains is tax-free. And here I want to think about it and make you think about it that actually this is a classical situation when, for example, you want to have a certain number of properties, real estate properties, and instead of possessing or owning this property at your private name, you could purchase them through a Belgian company. And then instead of selling each and every individual property, you can use your company and sell the share of the company. And basically, you can transfer the property of the company and along with all the property below at zero taxes. So you are realizing a capital gains, selling your shares tax-free. So this is one of the cases, but the key word here is the long term. What does it mean the long term? Is that you should not be a speculative operation, okay? So you cannot behave like I'm selling today a share of a company, tomorrow I will sell another one, and then I'm acquiring another one. I'm doing this like a professional manner. Then you will be taxed at the ordinary rates, okay? Then, case number 2, trading with cryptocurrencies. Trading with cryptocurrencies, it's tax-free in Belgium only if you still follow the principle of being not speculative. So, what does it mean? It means that it doesn't really exist a precise law that talks about, okay, I'm realizing a capital gain with cryptocurrencies, and then if I'm if I do it in few months, it's professional trading. If I do it in 6 months, it's not speculative, etc., etc. But it's a guideline, it's a clarification from the Belgian tax authority that says if you are trading not consecutively and not every day, in not a very short period of time, then we can consider your capital gains realized on trading tax-free. Basically, the guidelines is the following. If you are trading on daily basis, this will be considered a professional activity, and then you will be taxed at the ordinary tax bracket rates in Belgium, which are very, very high. Otherwise, if you are working with trading, you're trading as a speculative manner, then you have a flat tax of 33% that you have to pay on your aside professional business, because when you work as a speculative, when you trade as a speculative manner, and this is not your principal activity because you're doing some other activities in parallel, which is the principal one, then you can be taxed at 33% flat on trading, okay? But if you're trading in a span of 6 months, what does it mean precisely? After 6 months, you make the operation, realize some gains, then you wait other 6 months, so the next year, you follow to the next year, then you can consider this trading not speculative, and then you are tax-free. Another important thing is that following this idea of being not speculative, so the third point that I want to add is that any asset, or well, movable asset, so financial product of any kind, which has been sold after the same time of trading, so the famous 6 months, because the 6 months is the famous time that basically allows to the tax authority to consider your activity not speculative. So these movable assets sold after 6 months, so it can be also let's say furniture of an apartment that you are acquiring, a famous portrait, you will sell it after some time. So any kind of object, or not just financial product, sold after 6 months are always taxed at 0%. It's not just they are taxed at 0%, but they are not even part of your tax file return, so they are not imposable at all. Then what else is tax-free? Point number 4 is when you purchase a property and you sell it after 5 years. By law, Belgian law, this says, the law says it's tax-free, absolutely. So selling property after 5 years. 5 years, okay? So if you realize a gain here after 5 years, the capital gains is tax-free by law, okay? But then there is a news here. Here we have some hidden law that a lot of people are not aware of, in which you can also pay the capital gain tax when you sell your property even before 5 years. I'm going to explain you how. Point number 5, I purchase a property and I sell it in 2 years, after 2 years. How can I be tax-free? So I consider my purchase cost to be at the moment of purchasing 200,000 euro, okay? Then the Belgian law says if you want to resell this property, you are entitled to have at the top of your prices 25% of its value. So you can increase your 200,000 euro by 25%. And then if you sell it after 2 years, you can do this. You can add other 10% because the Belgian tax law thinks that your value could be increased by 10% by default every year, okay? So you can multiply this 10% by 2. So here you're gonna have 20K plus 25% of it, which is basically other 25K, plus other 20K. And basically, if you resell your property even before 5 years, let's say in a span of 2 years, because here I made the example of being 2 years after, you can sell it at 245,000 euro tax-free, okay? So if you manage to sell it at this amount, 245,000, you don't pay any taxes. There is no capital gain tax. Of course, if you sell it above, already in 2 years, you manage to sell it above 245,000, you start paying a capital gain tax above this price. And the capital gain tax above this price before 5 years, it's 16.5%. So it's not zero. Then another element, point number 6, your rental income is tax-free in Belgium. So it's zero. The perceived rental income in Belgium is tax-free if you rent it to individuals, so to not to entity, or you can rent it to individual, but you have to make sure that those individuals that are not running, they're using your property just to running their professional business. Huh? So it has to be an individual that use this property in a residential way. Okay. And the second, the property has to be unfurnished. So this is the scenario where your rental income is tax-free. I already talked about this specific scenario in a previous video in real estate Belgium income tax. Okay, so if you missed this video just watching, I will put the description, the link in the description below this video. Okay, you pay some taxes on this rental income anyway, but on what exactly? Not on the real perceived income, but on the cadastral value. So when you put your property under rent to individuals with an unfurnished property, residential of course, only the cadastral value will be part of your global income. So if this property worth 1,000, only 1,000 will be accumulated to your worldwide income, okay? So if this is your only income, most likely this will be tax-free as well. Keep in mind that whenever you want to qualify for this specific zero tax-free, 0% rental income, you have to make sure that this is not your principal activity. You always have to prove that you're running your business and in parallel you have some property under rent. And this will allow you to benefit from this tax-free status. Otherwise, the Belgian tax state could requalify this income as your principal income. Then everything will fall into the ordinary tax bracket system in Belgium, which is the one with very high taxation, like up to 50%. Finally, point number 7, your foreign income taxed abroad is not taxed in Belgium. So here it's mostly a matter of analyzing the convention to avoid the double taxation between Belgium and a country from which you're perceiving this income. But for example, if you have purchased a property abroad and you're perceiving rental income from another country, and this country has an agreement with Belgium, so has the convention to avoid the double taxation signed, you pay taxes in that country, but not in Belgium. So Belgium will consider this income like part of your global income, but you don't pay taxes on this income coming from abroad. This is because the Belgium, in general cases, applies the exemption method to avoid the double taxation. So you pay taxes basically only on the foreign income, which is produced territorially in the country from which you have purchased a property, if this is the case, or other professional incomes of different kind. Of course, this is a general solution. We have to always analyze the convention to avoid the double taxation to make sure that that specific income it's fall to the exemption method. Now, the exemption method, it's something that works very well when you mostly have income from abroad, but still makes your income, your global income in a country where you are residing bigger, and the local income will be taxed at a higher tax bracket rates. So it's almost tax-free. If you want more details about this exemption method, if you are living in a country that applies the exemption method, you might be more lucky than living in a country where you have the tax credit method, which is still a good way to avoid a double taxation issue, but is not so convenient as much as the exemption method. If you understood correctly, or if you didn't understood correctly this video, if some points were not so clear, well, just in the description below the video, you will have our contact email, info@ESENtaxa.com. You can write us, you can ask us a consultation, a consultancy services. You can also visit our website, www.ESENtaxa.com, or you can have a free call of 50 minutes with us, in which we can drive you through our consultancy services. We can understand exactly what's your point and then address you to the right consultation services. It can be a tax simulation, can be an analysis of the country you want to relocate into, a case assessment, tax regime analysis, etc., etc. If you like this kind of content, if you like to explore more and more jurisdictions and really go in details on certain kind of situations and scenarios hidden behind the law that you're not easily find online, subscribe this channel. And like button, please, and notification bell to be always updated whenever we release this kind of video. Thank you, and see you the next time.